Okay, today is Wednesday, September the 18th, and this is the daily trading plan. We are trading right at resistance up here at around 1702 basis the December S&P contract, and we're considering and trying to work putting on 1685 puts here that are trading between 3 and 350. These are very short-term weekly puts that are going to expire just in a few days here on Friday. So as long as this area isn't taken out, this 1702 to the upside, I want to be short this market with the idea that we'll go back down here to 1686 to 1682, right about where this ellipse is. So what the action that we're looking for today is a duplication of what happened here. And so we're going to look for price action that's going to go down and expect that we're going to get a little bit of a retracement, perhaps up into this area here, and then a further decline back down here to 1686. If that happens, we'll be rewarded, and I would expect to get at least $6, a doubling of this position once we reach down here at 1686. If this area is taken out to the upside, I will exit this position, get long calls, and expect to go to the next area of resistance, in which there's quite a bit of distance up to the next area. Record these values: 1726.50. If we take that area out to the upside, we're looking at 1750 basis the December S&P. Beyond that, the next one is going to be too far to measure. My goodness. Okay, so 1750 is going to be sort of the ceiling that we're measuring so far, which is 50 points away. To the downside, if we should break through this area of support, next area of support is going to be at 1670. Next area is going to be at 1652. So we've defined the range here in which we expect this S&P market to trade in. Looking ahead just a little bit, once we get down into this area, then we can have a couple of things that we can do. We can take the position off, cash the trade out. Or we could take half the position off and then come in and buy some calls in here, because I expect this to be significant support in here between 1686 and 1682. So effectively, if we're able to do that, if this market reaches down and does this and supports in here, then we have the possibility of extending this trade by creating a strangle. By legging into this position, we acquire a very low-risk presence in the market, and then however distant the market moves from this area will represent our profits for the trade. If you're looking at us today and you're taking the demo, record those values, and you can record this video and plot those horizontal lines onto your screen.